Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching IndianOpen. And Deven, I'm afraid I want to wish you a good morning, but the equity markets are suggesting that it won't be a good one.
Yeah, but you can still wish me a good morning.
Yeah, well, good morning.
Morning, nonetheless.
I hope the day turns out better.
Yep. And good morning to all our viewers as well. It's not going to be a good day of trade, and that's an advance warning looking at what's been happening across the globe. U.S. equity markets tanked in yesterday's session. 5.8% lower for the Dow Jones, followed by S&P 500, which was down 4.89%. Remember, Nasdaq futures are still locked down on lower circuit right now as we speak. Bear market for the US, yes, intraday bear market for both S&P and for Dow, but Dow closed in the bear market. S&P just a smidge above that, but that's probably going to be taken down in today's session as well, keeping in mind what the futures are doing. Just to look at a few charts to give you a perspective now, historically, if you look at the S&P 500 as well, and the fact that global stocks right now are in a complete phase of fear. If you take this is actually a chart of the S&P 500 and whether or not this bull market that we've been talking about is over or not. There have been instances, and this is a chart since 1974 onwards, where you've seen peaks and troughs across for S&P 500. There have been 3 instances, and the circles in pink will represent 3 instances, and the 50 monthly moving average, which acts like a support level. So only on 3 occasions, one was the financial crisis, one was in 2002, and one was earlier on, closer to 1990, when we actually breached the 50 monthly moving average on the S&P 500 and saw a further correction and a deeper bear market. On all other instances, you've actually taken support. The blue circles are supports that have been taken on occasions of a fall in the markets at the 50-day moving average. So right now we're just at the cusp of that support. So let's see whether or not this could be one of those many occasions where this 50 monthly moving average proves to be a support rather than a breakdown completely.
Yeah, and of course, the greed and fear index, though, clearly suggesting that there's a lot of fear on the street right now. So you got to keep that at the back of your mind, that the market's right now in the fearful mode, and therefore fear makes people do things that they otherwise may not do on a rational basis. Yeah. Yep. Let's talk about that with Seth Freeman of Glass Stratner Advisory and Capital Group. Joins us right now on the phone line from California. Seth, good having you. Thanks much for joining in. We heard news about possible quarantines or a lockdown mode for California as well, so all the best for that. The question is, what does all of this fear do to markets? Is it too soon to call it a value buy, because this may become even more valuable?
Well, this is definitely a serious fear environment, as we discussed might have been the risk when we talked on last Tuesday. I think several deep value investors are looking at shale producers here in the United States that have just really taken a severe hit. But I think we're not done yet. We're looking at over a 4% decline, 4.25%, I guess, right about now, after the president tried to give a speech to reassure Americans and the world that things are under control. Yeah, well,
that doesn't certainly seem to be helping, Seth, right now. And that's my question to you, Seth. As somebody who's looked at markets all through these years, is it possible to predict where is it that flows might start coming in? I mean, yes, there is value right now, well established. Is there any indication of when flows could start coming in? I guess not.
I think it's a little too early if you're looking at what's going on in the market today in Asia and futures in the U.S. This news about blocking visitors from Europe was quite a surprise, I think, in terms of how broad that kind of statement is, carving out the U.K. And it looks like, the coronavirus could have the problem here is that the effects of this are going to be lagging. It's not as though if the virus went away in 2 weeks, things are going to snap right back. And that's where the risks are, because ultimately it's about earnings. And this is extremely disruptive.
Right. Seth, good morning. I mean, Donald Trump did try to soften the blow a bit by saying that these restrictions are on people and not on goods. So, trade will not be affected in any fashion whatsoever. But that didn't seem to, soothe any frayed nerves, for the equity markets. What's your sense on whether or not it's going to be risk off for some time in terms of equity trades? There will be other avenues, there are different asset classes where money can be pushed into, but equities as an asset class will continue to see outflows for some time.
Well, it depends. People, the news, the words tonight are that maybe there's reached a capitulation, but I think there's actually still room for further decline. And this notion that this is about people and not trade is a misnomer. There's already talk about, within China itself, the extent of factories staying closed and so forth. There was even some news earlier today here in the U.S. about school supplies being in short demand for the fall. And it's, we're only in March. That indicates how far in advance importers are making their plans, and they're looking at shortages. This affects auto parts. This affects all kinds of industries. And it is about trade, because if people aren't going and traveling, they're not buying products. They're looking at losses. We're a 75% consumer economy, and people looking at their retirement funds and savings going down 22% in a very short time is very frightening.
In all of this, Seth, while the global equity markets are in a bit of a panic and frenzy, look at China, the epicenter of the problem where it all started. China has actually managed a V-shaped recovery. They've bounced back, and while they are still, in some amount of pressure in light of what's happening globally, they are way off the lows.
Well, China has been in a decline for the last few years, and there is a sense, I guess, that maybe the worst is over for China. But there's also a sense in the U.S. That with greater availability of coronavirus testing, that it's going to become more apparent that more Americans are actually infected with the virus. So I don't have much greater explanation about the China market other than the fact that we also can't necessarily rely on the information about the extent of the virus coming from China either.
Right. Seth, one last question. Most of the conversations that we've been having have suggested that emerging markets, for that matter, once the bottom is in place, will have a far superior outperformance versus developed markets. Is that a view that you hold?
Well, possibly for larger caps, because of the greater ability for traders. It has to do more with structural issues and the float, and the fact that many of these shares are in indices and index-based funds. So that may be true, but in a general risk-off environment and in a situation where there are competing markets that are pretty badly beaten, starting with the U.S., I think it will be slow to see money flowing back in large amounts, flowing back into emerging markets in the near term.
Okay, Seth, we'll leave it at that. Thanks much for taking the time out and being with us today, and all the best for the days ahead. Well, as much as we fear what's happening to markets around, there's also this human factor that you've got to keep in mind. California, as I heard in one of the groups, also goes into a bit of a lockdown mode, if I'm not wrong. And US, the number of cases are spiraling too. Is it possible to predict when flows will come in? I guess not. But what to do in a scenario like this with the Indian markets? Well, let's get in first. Let's kickstart the conversation with Parthiv Shah. He's director at Tracom Stockbrokers. Joins us right now on the show. Parthiv, good having you. Thanks for joining in. Just the behavior that I want to understand of the crowd, Parthiv, right now. Over the last few days, have you seen clients going out and selling out their stocks at whatever levels? And part two of my question is, thus far, in any of the conversations, we haven't quite heard margin calls getting triggered in a large way. At least I haven't heard. Have you seen instances of that at your brokerage or in brokerages around?
Good morning, guys. Neeraj, very frankly speaking, you're absolutely right. So far, I think hasn't been a case of major leverage positions getting cut because this has been a market scenario since the last 1, 2, 3 months, wherein I think nobody has had the guts to build in very big leverage positions because one was not really getting any sort of signal in terms of markets really making a lot of money for investors. So I think luckily this time it certainly seems, and thanks to the regulators, I think SEBI has always kind of chipped in and tried to make the margin rules really strict, as a result of which a lot of brokers also, especially after the Carvey episode, I think have been very, very cautious of the fact in terms of what sort of leverage to give to which clients to give. And I think that's one of the reasons why I think we don't see such a scenario. But talking about the sentiment, Neeraj, trust me, since the last 1 week, on an average, I was seeing the intensity of calls that we've been receiving in terms of our clients. I think, yes, certainly there are a lot of nervous clients. There are also clients who are basically still cash rich. Maybe they have good source of other income, wherein they are willing to deploy because they know that India's long-term growth story is intact. But you know what tends to happen is that if they bought something last week and after they see that particular portfolio being down by almost 10%, and trust me, even if the bluest of blue chips, the HDFC banks of the world, the Berger Paints of the world, even if it's those quality of stocks being down by 10% in a week, they certainly do call back and try and check what's happening. And you know, today again, what we are going to witness is another free fall in the market. But yes, Neeraj, we know for the fact that this is not the first time ever our markets and the global markets are going to witness such sort of a fall. We were down by almost 14% in terms of the Nifty and by 20, 30, 40% in terms of a lot of stocks. And generally, as per the textbook definition, it's the 20% mark which tends to call a bear market. But I recollect even in 2010, where the markets were down by 28%, post which in the next 3 years, the markets recouped almost 96% of the ground. So I think a lot of smart investors are also very aware of the fact that, you know, these will certainly be the best times to buy in their favorite stocks, which they were not able to buy since the last 1 year because of valuations. The growth story in India is not going to come to a standstill forever. So I think no doubt the carnage has been very, very painful, easier said than talked. But you know, certainly it's tough times. But I feel that, you know, people who still have good cash flows in their other sources of business or income, I think they are definitely deploying into these markets, and they are the ones who will certainly get rewarded.
In fact, you know, growth is something that this particular market environment with the crude oil prices plunging the way they have is something maybe you can have a hold on. Even inflation will start to come off, which will give the RBI slightly a bigger headroom to go ahead and make those policy decisions. But Parthiv, just stay on with us. Lots more to talk about. There are a whole host of stocks, individual stocks that you need to monitor this morning, which may have a different reaction based on the news that's come about, and as well as some brokerage calls this morning. Soumya joins in for that. But Nikki, let's come to you first on some stocks news.
Sure, I'm going to start off with L&T, which has moved the Bombay High Court against Yes Bank and Reserve Bank of India. It has filed a writ petition under the banking regulation, essentially seeking the provident money exposure out there. L&T has around 100 odd crore exposure to Yes Bank 81 bonds, where the staff provident fund is to an extent of 25 crore. According to the annual report per se, the firm had an exposure to 9% of perpetual bonds of Yes Bank. We are also looking at Biocon, where there's a positive development out there for the company. Biocon has won a US court ruling that has invalidated a Sanofi patent for insulin glargine device patent. This essentially removes the key hurdle to commercialize this particular insulin glargine, and which is going to be co-developed by Mylan. New drug application is under active review by US FDA, and the target action date for this has been set in June 2020. Also, we're looking at IndusInd Bank, where there's an exchange notification suggesting that the non-disposal undertaking of pledged shares has now been revoked. Essentially, in 2016, it was the international subsidiary. The promoter created a pledge of around 23.8 million equity shares in the favor of Citibank under a clause or an undertaking suggesting that they're not going to be disposing this off. That particular now set clause has been revoked. So you might just see an action on account of this. We're also looking at SH Kelkar, which has said that at this point of time, the company has enough inventory. In fact, that is expected to continue till April 2020. Post that, that could be a problem if the current situation continues. And sounding it off a little bit, or maybe, just trying to assuage the fears a little bit, it said that operations at Italian arm remains unaffected right now, and the China factory has become operational from the first week of March.
Right, thank you. Thanks very much for that. What are brokerages saying, sir?
Well, a couple of them. The first one is on Vodafone Idea, where CLSA has upgraded their rating to a buy from a sell rating and have hiked the target price to 12 rupees from 3.5. Now, the brokerage says that given the change in sectoral landscape and the sharp correction in share price, the risks are overdone for Vodafone Idea. Now, lower AGR risk, EBITDA tripling by FY22, and focus on top circles are the key positives that the brokerage is expecting from the company. It also says that the growth is set to accelerate on the back of tariff hikes and is expecting a further 40% hike in tariffs. Lastly, it also expects Vodafone Idea to give up spectrums in the weak circles and focus more on its strong circles going forward. Second one is Indigo, where Citi has maintained its neutral rating with a target price of 1,570. Now, according to the brokerage, a 15 to 20% decline in demand could mean a 5 to 7% impact on the revenue and 15 to 20% impact on the EBITDA of Indigo. Now, along with this, it also says that there is further downside as yields might also fall because of lower demand, and then there is mark-to-market losses because of rupee depreciation that might happen in Indigo's book in the fourth quarter of financial year 2020. Now, though the brokerage expects the stock to remain under pressure post this profit warning, it says that this is a transition phase and the long-term demand for Indigo is intact, and long-term demand for travel is also intact.
All right, guys, thanks very much for that. Parthiv, comment on this. Travel and tourism taking the biggest hit in the lot. Hotels, airlines, railways, everything. Do you feel that this is, that short-term blip that you're seeing, the event will pass over, demand will come back?
Not really in a hurry, Devina, for sure, because I think one of the airlines was also talking about the fact that even if they don't have passenger load, I think they still have to keep a lot of their flights flying, which means burning a lot of fuel and a lot of overhead costs. And this is to maintain the rules of them to have the clearances in the ground. But I think it's going to be very, very challenging. And forget the domestic airlines, not only that, internationally, I think airlines as a sector will certainly need a lot of coordinated efforts from a lot of governments in terms of protecting this industry. And I think we know for the fact that, this is like the contagion, and after WHO talking about the fact that this is a pandemic, I think it's not going to be easy for these sectors, whether we talk of hospitality, hotels, airlines, even domestically, if you talk about names like PVR, Inox. Unfortunately, we were just keeping our fingers crossed that this does not spread in India at a rapid pace. But now, in terms of the number of cases and number of states where we are seeing these cases emerging, despite the fact all the action that the government has taken, it's very difficult for these industries.
No, and I think that's a fair point as well. It's a bit of an unknown entity. Though, as they say, investing is about building a hypothesis and then taking a bet, not necessarily when the time is right, but maybe when the time is bad. Saurabh Mukherjee, founder of Marcellus Investment Managers, advocated this the last time that he spoke to us. Let's get his sense on how is he viewing the situation now. Is he viewing it any differently? Saurabh, good morning, and thank you so much for taking the time out at such a short notice. Really appreciate this. Just wondering, Saurabh, the playbook the last time, according to you, was that since we can't predict the impact or assess this impact of the coronavirus quite well, the best is to stick to businesses and try and figure out which businesses are below the intrinsic value. Are you still sticking to that, or is there a tactical question that, or a tactical thing that comes in out here that maybe these businesses could become a bit more valuable in the near term?
I mean, look, for us, investing has been simple for a long, long time. We buy great businesses and we buy them steadily pretty much every day. So if you look at this correction, market, I think is down nearly 15-16%. We are down 6% in both our funds, so both in consistent compounders and in little champs. We're down 6% rather than the market 16-17%, and we are putting money to work every day. Last night we did a call with our clients encouraging them to put even more money to work. I think there are three fundamental reasons for staying calm through all of this mayhem. Firstly, the data from China clearly suggests that they have got on top of the issue there. Even if you don't believe the Chinese government's data, the stability of the Chinese stock market suggests that the worst is past, and therefore supplies from China to Indian pharma companies, to Indian auto companies should be resuming through the month of March, and that addresses one fundamental issue that our country had vis-a-vis imports from China. The second thing is cheap oil and cheap money is magic for the Indian economy. Historically, we've been incredibly dependent on cheap oil and cheap money, and I don't think it'll be any different this time. Given the rate at which global central banks are cutting, I think the RBI will have to push through rate cuts of 50 bips in the next 6 weeks or so. And that should help the Indian economy on a fundamental front again. And thirdly, our dependence on the Western economies is relatively limited. So if you look at IT services and auto, you can point to meaningful dependence on exports to the broader world. But beyond that, the Indian stock market really doesn't have that many export-centric plays. So all said and done, the current correction, the 6-7% pullback in our portfolio, or the 16%, 17% pullback, perhaps 18% pullback now in the broader market, should give you opportunities to buy high-quality names at good prices. Don't try to time markets. Buy quality companies. Buy them steadily. You will make plenty of money in India at a high.
Right. Saurabh, good morning. I just want to know from you, I mean, up until now, there was this whole aspect of liquidity driving markets to record highs despite fundamentals not supporting. Now, with this event, there's most likely a probability that that liquidity also, in a way, gets sucked out of the system. Then what is there to support the indices?
Yeah, so I think this notion that fundamentals weren't supporting, I think, is a bit of a myth. So as I've said several times on your shows, if you look at names like Asian Paints, like Pidilite, like HDFC Bank, like Kotak Bank, like Dr. Lal PathLabs, you had 25%, nearly 30% EPS growth this year. Right, so if you have companies who are growing earnings at 25-30%, that's the level of share price compounding you're getting there. Now, the beautiful thing about the current situation is, although let's take HDFC Bank, classic example, earnings are up 25%, actually more than that. Earnings will be up some nearly 35% over the last 12 months. The stock is down 10%. Right? If that isn't a buying opportunity in HDFC Bank, I don't quite know how else I can manufacture one. This is probably the most successful bank in Indian history. Earnings are up this year. PAT, I'm talking about, is up nearly a third. PAT is up a third. Share prices are down 10%, probably more than 10% now. And therefore, there is no question of there not being fundamental support for a buy on HDFC Bank. And there are other stocks like this. Therefore, don't get carried away by this notion that there isn't fundamental support for buying in India. That simply isn't borne out by the facts.
The other point also being is, Saurabh, most would want to probably wait it out till Q4 results come out, until there is a possibility of any telltale signs of what this has done to the earnings performance. Do you think then that's a prudent approach, or then that would also risk missing the bus if the move turns from here?
But look, never think about investing about missing a bus or getting on a bus. There's no such thing like that. This notion that I can time markets or anybody out there can time markets is a delusion. By all means, if an investor feels comfortable waiting for Q4 results, they should. But unless, there's something radical happening out there which I'm unaware of, the sorts of names I've been discussing, the sorts of stocks we have in our portfolio, an HDFC Bank, for instance, a Nestle, for instance, a Dr. Lal PathLab, for instance, Relaxo, for instance, these sorts of portfolio names from Marcellus, I'm pretty confident you'll get pretty healthy 4Q numbers. So by all means, if you want to wait till March, do so. But then don't worry about coronavirus. On the back of 4Q fundamentals, go ahead and buy.
Saurabh, just one question in lieu of your first answer. You mentioned cheap oil and cheap money. And the point is, money is right now going out in droves out of India. You reckon it's the domestic money that will give the show?
Interesting that you mentioned that. We're doing a call with, say, a foreign investor almost every second day. So we're getting plenty of interest from Western endowments, Western family offices who want to use this mayhem to come into India. So I'm not so sure that the watching the stock market flows day to day is going to give us any useful information. We have a whole bunch of, I would say, around 25 high quality companies in India. Average market cap $20-30 billion for these high quality companies. These sorts of names are of interest to investors around the world. I wouldn't get too worried about a month of FII outflows. If you look at FII outflows over the last 20 years, they've been incredibly robust through dot-com bust, through 9/11, through Lehman, through demonetization, through UPA, NDA. FIIs have pumped in anywhere between $12 to $20 billion pretty much every year into India, and I don't think that will stop in the foreseeable future.
Well, that should be music to the ears. But Saurabh Mukherjee, appreciate you taking up the time and giving us your sense of how to move around in this scenario like this. Thanks for your time.
My pleasure. Bye.
That's Marcellus Investment Manager Saurabh Mukherjee saying that the time to buy is now. Don't try and time the market, that is. Okay, Parthiv is with us and we've discussed a couple of things with him. We'll talk more with him as well, but it's time to focus a bit on the charts as well. 5 minutes left for the markets to kickstart trade. First, Yash Upadhyay for our special segment Bloomberg Edge. Yash, we are very close to market open, so let's make it quick. What's the stock on your radar today?
That's right, Neeraj. So we're looking at Sun TV, and it has been under significant pressure over the last several trading sessions. We are seeing that the ADX indicator, which is the directional indicator, going upwards with the minus DMI line, which is the one in the red color, expanding further higher. The ADX line, which is the one in white too, has been moving up, which is an indication that we are seeing a very strong bearish trend at the moment. While we did see a gain of 3% in yesterday's day of trade, this could turn out to be as an opportunity to go short at higher levels. The ADX indicator has in fact worked very well in the past, and this is the 5th time that it has been triggered, and the last 4 times whenever we had a negative call like this where the minus ADX line, minus DMI line has moved higher with the ADX line, the average closing returns have been somewhere close to around 11% on a monthly basis.
Okay, and this has worked well. You already mentioned it's worked very well in the past as well. Yash, thanks so much for putting that into perspective. So that's Sun TV. Well, if it was, if Star was listed, you would probably think that with the IPL getting cancelled or likely to be getting cancelled, that advertising revenues might get impacted. Though I must say it's all in the air right now. There is nothing confirmed, so please be mindful of what we say on air. This is what is being spoken about. There is, I think, a governing council meeting of the IPL on the 14th to decide the fate. Let's wait and watch till there. Brijesh Singh, Senior Technical Analyst at Stock Access, with us on the show as well. Brijesh, we are very close to market open. So quick thoughts. First, on the index, are you taking a trade on the Nifty or the Nifty Bank?
Good morning, Neeraj. Definitely Nifty is looking weak. I would be only suggesting that the trading prospect looks much more better than the investment right now. Nifty probability chances are that we might even break the recent swing low, or even a 200 simple moving average on the weekly chart. Now, this 200 simple moving average on the weekly chart previously was broken and was in the March 2016, and from there onward it was been moving up. But this time it looked like we might break and we might trade below that also. So chances are that Nifty is heading towards a level of 10,000. Keeping a stop loss of 10,600, one can go on a sell side, or 10,640, the previous swing high. The previous swing low, and look for the 10,000 or even below that level.
Okay, and in light of that then, Brijesh, what are the stocks that you're recommending?
SBI looks weak to me, so one can play on a sell side for the target of 220. Present rate can be used to go short. I think probability gap down opening might be there. So 220 is a target which I'm looking for. Stop loss would be of 52, or even this 220 breaks, then the probability 200 is simple moving average on the weekly chart, that is quoting at 195. We might retest that value. Another call is sell Apollo Tyre at the present rate of 114 with the stop loss of 120, play for the target 104.
Apollo Tyres was one of the weaker links in yesterday's session. I saw a big dip of closer to, I think, 8% yesterday, 115 on that one. We're about a minute and a half left to go for market pre-open, and I just want to quickly look at what the SGX Nifty is doing before we go across and get one final call from Parthiv. I think 4.5% under for the SGX Nifty, down on under 10,000, so 9,936. Parthiv, one bet that you have right now that in this period is a good buy. A short answer.
Sure. So Deven, I think you repeated this idea a lot many times, and it has corrected from its peak. And again, it's going to be HDFC Life. I think this is one sector which I think will not really be impacted with the pandemic. And also, I think it will rather make people more aware of the fact that how important life insurance is. So underpenetrated story and clean company. So HDFC Life will be my bet in such markets.
Okay, HDFC Life, 513. The last 3 months, the stock's been down about 12%. Remember, this stock had some amount of frenzied buying when insurance as a plague started to become the theme, and it was life insurers, general insurers, everything that had the play. But then since then, for the last 6 months, the stock's not done a whole lot much.
But just one quick thing, Devina, the latest numbers that came out were pretty strong for HDFC Life. Amongst everything else that came off, HDFC Life did very well. Yeah, the monthly AP numbers.
Yep. And that's what you have as setup to pre-open. SGX Nifty again, just a quick glance at that. Currency yesterday, saw some strength. Came down to about 73.8 or something, and now it's back up above 74.27 for the currency. We'll come to that in a bit. But Nifty opening lower, pre-open not as severe, but give this some time. 10,348, quite a slow start in terms of the ferocity of the downfall. But individual stocks, and just quickly looking at all of those names, banks are taking it to the chin, especially IndianOpen Bank and Kotak Mahindra Bank, two banks which are showing you a 10% cut early morning. Tata Motors 10% lower, Yes Bank 10% lower, Z is down 7.5%, Vedanta is down 7%, Tata Steel is down 6.5%, HDFC Bank is showing you a 5% cut. Wait and watch for that and see whether these are the actual. These may not stick. GAIL is down 6%. GAIL was a top loser on the index yesterday. SBI is down 2.9%. Maruti Suzuki 2.3%. Reliance Industries is down 4% again. Bajaj Auto, everything's down. What's up is HUL, that's showing you a 5% pop. UPL is showing you a 5% pop. HCL Tech is showing you a 4% gain, and Asian Paints and TCS are up 2.5% and 1.5% respectively. But again, violent swings early morning, just wait it out a bit. Currency at 74.34, so almost 1% depreciated overnight. As we start off trading this morning, 74.33 to the dollar. Broader market space, breadth is extremely negative this morning, Neeraj.
Yeah, well, one IndianOpen Bank, and I know we've marked that, but keep that at the back of your mind. It could be that big talking point in the session today, because the company with which the pledge was kept from the promoter entity, which is IndianOpen Limited, that pledge is now open, and therefore that company can sell. Citi, I think, can sell that stake in the open market. Does that fear, if not the actual event, keep that stock under check? That's the question. Let's wait and watch what happens there. Inbound visas to India have been revoked till April 15th. I reckon it will hit inbound tourism related stocks in a big way. Watch out for Interglobe Aviation, watch out for Indian Hotels, watch out for Delta Corp. That entire set of stocks would be very, very important to monitor. SpiceJet is down 14%. Interglobe Aviation has said that they will see a hit in Q4, needless to say that, but they've seen a 15 to 20% decline in week-on-week bookings, and that's the extent of damage that Indigo is seeing, and therefore I wouldn't be surprised with whatever price cut comes in out here. And watch out for Jubilant FoodWorks. Now that conversation around the IPL will get even more stronger, and maybe that has an impact on this stock too. Well, could it decline by 5 to 6%? That's the key question. Let's wait and watch. For now, it shows a downtick.
Yes, Tata Motors is at 89 rupees. I mean, this stock, well known, but not factored in at the time. When we finally digested the fact that China monthly car sales dropped 80%, and that's where bulk of Tata Motors revenues from JLR come from. That's something that's hit the market, and the frenzy on Tata Motors selling out. The stock's at 90 now, down 9%.
It's all looking slightly wobbly. Let's wait and watch. Watch out for Larsen & Toubro too, by the way. That's the other stock. Middle Eastern concerns would now come and haunt this one. 1,090 right now. And when everything is going down, you wouldn't expect a company which is in the thick of things when it comes to infrastructure spend, which is not quite picking up, to do well. Let's wait and watch. But we'll talk about all of these stocks. Watch out for the bond yields as well. They should be off. Across the world, this phenomenon is being witnessed, and therefore we shouldn't be any different. Actually, no, 6.15. So the Indian yields are still doing okay. The currency, we've already marked it. Yesterday strengthened a bit. Let's see if today it's weakening. 74.26. That's a really sharp gash on the rupee in the session today.
And then lower 74.33.
It's just looking slightly wobbly. It's been choppy, by the way. It's 3 times now in the last 3 days that we've dipped sub 74, only to bounce back in the last few days, maybe because of intervention otherwise. Let's see if today is any different. 74.2487 currently for the rupee. Watch out for companies which get impacted because of higher import bills. And Interglobe Aviation and SpiceJet certainly get impacted too. By the way, Gaurav Bisa is joining in. He's AVP VP at LKP Securities, with us on the show as well. Gaurav, good having you. Thanks for joining in. What's the template right now, Gaurav? We'll start off lower, yes, but a lot of stocks are actually showing very heightened reactions. What are you doing on the Nifty or the Nifty Bank?
Good morning. As far as our action is concerned, we are not too aggressive on the markets. We are just keeping it on intraday perspective for the reason that we are seeing a lot of gap up and gap down openings happening in the Nifty, and the kind of volatility that we are seeing. I think a normal trader should be a little bit skeptical as far as trading is concerned, unless we don't see some stability coming in the Nifty index. Playing just for the sake of it would not be the right approach. And as far as the levels are concerned, 10,000, of course, the coveted mark would be immediate hurdle, which in all likelihood can be taken out. But if you look at the monthly charts, the next set of supports come between levels of 9,750 or rather 9,700 to 9,900 zone. So if Nifty approaches this level, then probably we can try to enable some good quality stocks, or even we can play for a bounce in Nifty. But till then that does not happen. We have seen that the breakdown that we saw below levels of 10,600, and it retested the levels yesterday, and now we are again seeing a plunge happening today. So in my opinion, the trend is still negative. I would not be playing for reversal as such, but yes, there can be a bounce back that can be expected from where between levels of 9,700 to 9,900. Till that does not happen, I'll be a little bit skeptical in Nifty and Bank Nifty.
Do you have any stocks, Gaurav, for the morning, or are you avoiding?
To be honest, I'm avoiding for the reason that we had a couple of stocks on the negative side. We had bought some put options. For example, Ashok Leyland is looking weak. But considering that Nifty is likely to open with 400, 500 points downtick, any shorts would not give you fresh opportunities, and longs would not make sense because they are going to open gap down. But the stocks that are still in the momentum for something like a Pidilite, if you get around levels of 1600 and if it sustains 1600, then buying that stock would make sense because it made a swing high, gave a small breakout. The trend has been quite positive in the name so far. So the stocks that are still in the uptrend, if you buy on retracement, that can be a good idea for shorting. One will have to see how the market reacts, at what levels stocks are opening. Just talking at these levels would not make any sense for the reason that we'll have a very strong gap down opening.
Okay, so do watch out for that. Parthiv, a quick 30-second view if you can, Parthiv. Jubilant Foodworks, because of the IPL cloud. 30 seconds.
I think it's going to be challenging, Neeraj, and we might not land up seeing the same sort of SSG that we've seen in the past. And the valuations, we know they're very, very expensive. So I feel that this is the counter that investors at this juncture would probably certainly avoid.
Okay, we leave it at that, Parthiv. Thanks very much for joining us. Appreciate you taking out the time. Deven Choksey of KR Choksey Securities is also joining us right now on the show. Deven, it is, a difficult time for the markets, difficult time for an investor who's probably deployed 95% of his funds. Sitting on the sidelines with 5%, trying to gauge whether or not the market, is giving you that opportunity to deploy the remainder of the 5%. What would your advice be?
Good morning. Unfortunately, I think the global market sell-off is creating a good amount of panic in every other market of the world, including India. And I think that's the reason for which I think people are panicking, people are losing the confidence into the system and into the economy. In my viewpoint, I think the fundamentals of our economy per se are, I think, still intact. They haven't shown any kind of signs of weakness at this point of time. But if the financial market brings in the crisis, I think I would think that it could create, I think, a multiple impact, I think, as far as I think the economic outlook is concerned. So maybe I think at this point of time, without thinking too much, I would like to think that I think financial markets across the globe who are basically, I think, getting into the nervous track and in the sell-off mode, I think they be controlled to an extent possible, so that at least I think the consequential damages can be prevented, if not I think completely avoided.
If you compare this to the ILNFS crisis, Deven, complete liquidity suck out, I mean, that kind of, put the brakes on the growth momentum as well and lending momentum as well. Do you feel that slowly but steadily, banks will have to start playing a role now in this crisis as well to make sure that that liquidity remains in the system?
Well, on one side, I think we definitely argue that there is abundant amount of liquidity into the system. Each and every bank would have the capacity to lend today. I think even the kind of a scenario that they have now, with the non-performing asset, I think they are relatively better off than what they were before. So liquidity is not a question mark. The bigger problem, and I think the serious problem, is that the banker is not interested in lending. Particularly the public sector bank, I think the managers and the people at the decision making level, I think extremely scared of lending money to anybody, because I think they have seen in past how the systems have worked against them in form of, I think, inquiry even post retirement. So to a greater extent, I think people are losing the confidence of lending money to the borrower. Private sector players are, I think, extremely picky. They are not immediately, I think, putting everything across as far as I think the lending is concerned. Their conditions have become, I think, quite stringent, which is rightfully so in this kind of environment. But at the same time, I think they too, I think, are scared of lending. So this kind of a fear which is right now operated into the system is the root cause of the problem, where I think the lending is not taking place and economic activities are not growing because of, I think, the borrowers not finding money, I think, at a time when they need it.
Okay, Deven, stay on. Minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, Mumbai Sessions Court extends Yes Bank's co-founder Rana Kapoor's Enforcement Directorate custody till March 16th.
IndianOpen Bank says its non-disposal undertaking of pledged shares has now been revoked. Promoters of the bank had pledged 3.43% stake in favor of Citibank.
Interglobe Aviation puts out a profit warning citing flight curtailments to some Asian countries. The rupee depreciation further adds to the company's dollar-denominated liabilities.
Biocon wins a US court ruling that invalidates a Sanofi patent for insulin glargine device patent.
SH Kelkar says its operations in Italy remain unaffected and the China factory has become operational from the first week of March. But it's back to some specific stocks, and Deven, I want to talk about IndianOpen Bank with you. This revoking of pledge, but essentially leaving the door open now for Citi to go out and sell stake. Does that remain a big overhang on IndianOpen Bank?
Neeraj, I think any kind of pledge, I think, is an overhang as far as I think the lenders are concerned, as far as I think the market is concerned. The borrowers definitely need to make sure that I think they have got the proper ability to service the pledge. I'm not talking about IndianOpen Bank in particular, but I'm talking in general. So certainly I would like to think that I think along with the kind of condition of pledge, I think there should be, whenever it is a listed company, and whenever I think listed company pledges the listed company shares to the lender, I think it should be made mandatory as far as the disclosure is concerned as to how the borrower is going to service the debt and pay back, I think, the money that he has borrowed. If that condition is not satisfied, probably I think this kind of transaction should not be allowed, I think, outside the market platform. That is what my viewpoint would be, and I think the regulator need to, I think, get inside this particular subject to stop the carnage which otherwise takes place and kills the investors.
Deven, for the immediate term, Deven, though, I'm asking specifically about IndianOpen Bank. What would happen?
Not too sure, Neeraj. I think can't be speculative on this particular aspect. I think I would rather hope and pray that I think no untoward thing happens at this point of time.
Okay. Just want to quickly get in a chart share going as well for IndianOpen Bank. So Gaurav Bissa, come to you with this one. The stock has any which way seen flight of money out. Do you feel that today's 10% dip, if it opens there, is an opportunity to enter?
If you look at the long-term charts, or if you look at the monthly charts, it is still giving a breakdown. 800 was the critical support area. If we do not sustain above 800 in next few days, there's going to be some more risk, because below that, I don't see on monthly or long-term charts, I don't see any support till the area of 550. So there's going to be a very critical level. If it indeed gives a close or a couple of week close below 800, I think things can go even much worse from the current levels.
Okay. Minute and a half left to go for market opening. I think we've settled at a 4% cut for the Nifty 50, 10,039 at pre-open. The big cuts coming in from the biggies like Reliance Industries, which is down yet again 6% lower. You've got SBI, which is lower. Kotak Mahindra Bank is 5% lower. IndianOpen Bank is 9% lower. HDFC Bank is 3.5% lower. So all of your bigger names there have been damaged in pre-open. The only one that's probably, all Nifty 50 stocks, by the way, are in the red. The one that is the best performer amongst all the losers is Yes Bank. That one is down just 1/3% at pre-open. So no major cuts or no major damage to Yes Bank. Quick top calls. Gaurav Bisa, you don't have a call. You're refraining from giving any calls. But Brijesh, are you going to give any top call for this morning?
As I said, SBI looks weak to me. So one can play on a sell side with the stop loss 252, play for the target of 220. And if we trade below the level of 220, then 195 would be the next level to watch in coming days.
Going to be starting very close to the 10,000 level. Let's wait and watch if we dip below those levels. But I reckon that today's casualties could well be those inbound tourism impacted stocks and the IPL overhang stocks. That's the new thing that has happened overnight, and therefore do watch out for those as well. I dare say watch out for IT stocks as well. They could be under a bit of a cloud. But 10,011 now below 10,000. This is for the first time that we're trading sub 10,000. I think since September 2018, if I'm not wrong. That's a very sharp gash that we've seen on open. Not that it was unexpected, but 9945. If we stay below these levels, then on a intraday basis, we are actually in bear market territory. So you got to keep that at the back of your mind. Frankly, if you compare the intraday highs to these, then we've dipped 20% from those levels. Let's wait and watch though. Sensex at 1,800 points lower, down under 5%. Nifty Bank 1,664. I reckon this would be easily 20% down from its highs as well. This is not a good start, and what the global markets are doing only exaggerating the problem. But now we know that the issue is truly home because of the travel bans that have been put into place. The mid cap and the small cap should also be correcting. This is not a happy start at all. 5% are open for the mid cap space, the small cap space 4%. Needless to say, the breath is terrible. Bring up the heat map. I doubt there could be any stock in the green, maybe one or two. No, not a single stock in the green. Yes Bank sees gravity down 14% immediately. Tata Motors down 11%. ONGC down another 10%. Vedanta, Reliance Industries is down 8%. I mean, when was the last time you've seen this kind of a losing streak in Reliance Industries? Frankly, to my memory, I haven't seen this even happening back in 2013 for Reliance Industries, but I may be wrong there. SBI down about 7%. TCS, HCL Tech, Infosys, everything is down. That's the sum and substance. Probably the only thing worth talking about is what is actually doing slightly better than the index, and that are stocks like Asian Paints, Nestle, to an extent Bharti Airtel, and HDFC. HDFC Bank too is actually in the list of the top 30 losers, top 25 losers if I'm not wrong, and Bajaj Finance has corrected another 5% as well. This is not looking good, viewers. The broader end of the spectrum too would be correcting. Deven, I'll speak all about it, but I just want to highlight one or two names that I think are really, really important. Firstly, from the perspective of companies where visas have been cancelled and therefore there could be an impact. Inbound visas cancelled, so inbound tourism impacted stocks. Interglobe Aviation, Delta Co-op, Indian Hotels. These are fundamental impact that we'll see on the earnings of these businesses. This is not just pure sentiment alone, and these stocks are correcting. The IPL cloud on Jubilant FoodWorks, how lower is it? 6% lower. That's about $100 gone for this one as well. 1544. Let's wait and watch if this corrects further. Devina, what are you spotting?
First, look at a few other names. Firstly, Avenue Supermarts in yesterday's session held out okay for itself. In fact, it was a stock that traded in the green. Now it's at 2,000. So that's coming around its fundraising price. I think 2,095 was its price when they raised money, and now it's below that price as well. It had gone up 2,500 plus, and from there it's corrected the way it has. It gets a little bit more cheaper, and therefore a probable entry point, and not making any recommendations. Inox Leisure is down 13%. That stock from levels of 450 is now down to 314. This takes it back almost 4 quarters for Inox Leisure. You've got Adani Transmission, which is down 12.5%. PNB Housing Finance, which is down 11%. Firstsource Solutions, so IT as a pocket, the mid-sized ones are also not seeing any respite. Container Co-op is down 11%. JSPL is down 11%. Balrampur Chini, Indiabulls Housing is down 10%. Interglobe Aviation, we just spoke about it. Balrampur Chini, Bajaj Hindustan, all sugar stocks have lost out. RBL Bank is down 10%. Saw a little bit of a pop in yesterday's session. Prior to that was a 22% knockdown. The bank has come up with clarifications talking about the health of the bank. But that's not reason enough for somebody not to go and sell in such an environment. And so is the case with IndusInd Bank. Aside from that, Parag Milk Foods, I want to look at IRCTC too. The stock yesterday stayed buoyant a bit, but then cooled off and now is locked down on lower circuits. So 1221 for IRCTC as well. Comes crashing down as fast as it went up. Spark is down, Dish TV is down. Oriental Bank of Commerce, Syndicate Bank, all banking stocks. So you put a finger to them and they're down. PNB is down another 9-10% or so. So amongst the Nifty 500, at least the first 30 or 40 stocks, more than that actually, have got cuts of more than 8%. So it's a complete washout of sorts. And that's what everyone's been talking about. When you're talking about capitulation, whether or not this is enough, where do you say that this is formed its base is difficult to pinpoint. 56 stocks are the only number of stocks across the board on the NSE that are advancing. 1,231 stocks are trading in the red. We still have Deven with us, and we still have our technical experts with us. Deven, this is some place where you would have anticipated support. Now we've breached down below 10,000. Panic and fear has gripped the markets, and a run on the money, the equity markets. But is there a silver lining that you see to this?
Every panic, I think, would have its own character of creating a bottom. So how soon, how fast it happens, I think that is something which is a guesswork. But in my viewpoint, currently, I think it's a run on money. People are trying to, I think, take the capital back home, and that's a reason for which I think they are selling in panic. I'm not too sure whether I think one could buy into this panic immediately, but my take would be that I think whatever good quality stocks that you are holding in the portfolio, you must not get panic, because the fundamentals of the business and the economy, they don't change because of the rout in the financial markets. Financial markets have their own dynamics. I guess I think the world over, because of I think the various situations, they have time and again I think given up, and as a result of which I think they have lent the world economy into the crisis at times. I guess I think the more important part here at this point of time for the regulators of every nation would be to ensure that I think the untoward I think situation do not happen in form of keeping the free markets and allowing the free markets to kill the underlying investment portfolios of investors. So that is an area where I think the enough work requires to be taken care of in this kind of a situation.
Right. Deven, we leave it at that. Thank you very much for joining us this morning. And also I want to take our time to thank our technical experts, Gaurav Visa, as well as Brijesh Singh. Thank you guys for joining in this morning. Prateek Agarwal, Chief Investment Officer at ASK Investment Managers, he's joining us right now on the phone line. Prateek, thanks very much for taking out the time. Incessant selling, moving us into the bear market for, as of today's session, the lows was as of the bear market lows. But this panic, is it warranted, Prateek?
Yeah, good morning. To some extent, there is coordinated downtake that we are seeing across the board. Now, is there actual selling taking place? Well, the markets opened down. So between yesterday's close and today's open, there was no selling that happened. It is sentiment. It is people looking over their shoulders and deciding to start the market significantly lower. As far as the economy is concerned, what gets impacted is, yes, services like travel, tourism, airlines, hotels, but that is a small part of the economy. To the extent that maybe software guys are unable to travel to transition business, any which ways they now have people stationed at various countries where they seek to seek business, so that doesn't get impacted. But if you are wanting to transition business, offshoring, etc., may get impacted a tad. So that's a marginal impact. There may be deferment of budgets. Once again, I would say in the whole scheme of things, marginal. Agri and agri-related does not get impacted. Government doesn't get impacted. If you take the consumption side of GDP, as a country, we benefit strongly from reduction in oil prices. So overall loss on account of the downtick in global economy because of the virus issue, etc. As of now, I would say balances. Big benefit on account of oil reduction. And actually, if trade reduces, imports reduce, we are a net importing country. Actually, the domestic manufacturing gets some more leeway. They get some more market access in our malls. Versus a very large percentage of imported products. Maybe we will find more of domestic products. So, in some manner, it could be positive. But that said, there is a slowdown in the country, and that is real. We were discussing in the morning that newspapers are reporting stock of Euro 4 vehicles still there. So the Euro 6 would be more expensive. If Euro 4s are not selling, then probability of Euro 6 selling quickly is lesser. So we should recognize that there is some amount of slowdown in the economy, and maybe it will persist for some time and behave accordingly.
So, Prateek, in light of that, obviously, this throws a spanner in the works of any sort of recovery anytime soon, even from an earnings standpoint. While you have some of these companies insulated, some export-oriented companies, rupee is now closing into record lows. Do you feel then one should take refuge in some of these names that are value buys and have some tailwinds to support them?
Yeah. So for too long, we have looked at sales growth as the only engine for EPS growth. I think we have been clued on to margin expansion as the key engine for EPS growth for quite some time, and that continues to be the story now. So if commodity prices are down and everything is down, it's not only crude, so all energy is down. Even some of the food prices are down. Vegetable oil could be down, and so on. Anybody who is using these as inputs should be reporting meaningful margin increases, gross margin increases. That's a manner of looking at stocks just now. So people with pricing power being able to hold on to their prices would report margin-led EPS growth. Nobody will report a volume-led EPS growth. So expect 3, 4, 5% kind of volume improvements. But if there is 0.5%, 1% margin increase, it can make EPS go up in double digits, maybe even mid-teens. Similarly, in financials, globally, you are looking at interest rates getting lowered, liquidity getting enhanced. If you look at the bond markets in the country, people are expecting a big cut from the central banks. And then on the flip side, if there are businesses who are able to lend at fixed rates, and that happens to spaces like auto, second-hand vehicles, gold, personal loans, etc. There one should expect to see some NIM increases. Once again, margin-led increases. And the smaller the ticket is, less would be the impact on that part of the market versus larger discretionary spends. So that is the part of the market we believe should be seen as defensive. That's the part of the market which has seen earnings grow any which ways over the past 3 quarters, and I guess that's the part where we have seen sizable valuation correction take place versus the broad market.
Prateek, good morning. Neeraj here. Is there a possibility of a second order effect coming into consumption. Inbound tourism is off now for the next 1 month at least, maybe longer, we don't know that. But that consumption plus the fact that if indeed there's a multiplier effect on people which dependent on these jobs, then maybe that, if not the quantum of consumption, then the ticket size of the consumption and a lower ticket spend could all come in, and would that disrupt that volume stroke price point growth for the next 1 month at least?
No, so inflation is out. Nobody is even thinking of raising prices. But the good thing is, even if you are able to maintain prices of your soap, shampoo, food products.
Pratik, sorry. I was asking if you believe that, all this while we've been talking about up trading, do you reckon consumers would down trade because they may not be able to consume less soap, but they might want to go in for a lower price soap because the tourism, inbound tourism, and the resultant impact that it has on a number of spaces would have some bearing, right?
Yeah, agreed. So to some extent that would happen. It's already being witnessed. It will be seen more. That should be expected, yes.
Okay. Pratik, the next thing is, I know that almost everybody would say, and probably you would advocate this in your buying activities as well, that these are the best times to buy. Fear is when you buy it, when the best time to buy. But I heard you mention in your opening answer to Devina that we have to take cognizance of the fact that there is a slowing economy and the globe is in play as well right now. Would you reckon that tactically we could get buying opportunities at lower levels as well?
So you have to decide for the moment. For our part of the market, we do believe the current levels are good. We have been building our portfolios, but if the scare on virus increases rather than getting addressed, we could be presented with better buying opportunities. So that's a possibility one should not rule out.
And that's actually what's been happening, because now it's getting more real on domestic shores with the number of cases here in India itself increasing, and that could feed into this panic further, Pratik. So in light of that, your advice is that to probably, if this gets worse off, then the buying levels will become better?
That's a rational expectation. If people are fearful, they go out less, purchase less, economy also slows a bit. Obviously, like it has happened today, without any trade between yesterday night and today morning, you got a big cut on the market. You could be presented with a better opportunity. That can always happen. And hence the whole idea in such times is to stagger a bit of buying and buy the best, which will come back as soon as things improve. Now here, I would want to say that in a situation where liquidity has been increased globally and made available at cheaper rates, while the economic recovery may take time, that will be gradual, but the market recovery can be very fast.
Are you expecting the RBI to do anything, Pratik?
Yes, so bond markets already indicate that SBI has cut savings bank rate by 25 bips. That's a big positive move actually. That's a good indication. We do expect some rate cuts in the by central bank as well. 25 bips should be a very high probability. 50 bips could be possibility.
Pratik, my final question from mine at least. We've spoken a lot about the domestic factor. Just wondering, how do you juxtapose the global fear that we have? I mean, Merkel going out and saying that 60-70% of the German population might get impacted. It's truly front and center for the US geography as well, the number of cases expanding. So while China is contained, and you can look that as a playbook, but China is a different animal, right? People can get quarantined for a month and not raise a voice. It's different in the other countries. What do you reckon the global situation could do to sentiment and flows and thereby levels?
Yeah, so we initially got impacted not because we got any virus impact, more because of global flows. So China is a big part of the emerging market basket. That country got impacted. Obviously, investors took out money from EMs. The vehicles sold across its exposures, and India also saw selling. Now, it reverses now, so China is contained. They are coming back up. And if that thesis is correct, then the EM vehicles should no longer see outflows. It should stabilize, and which then means that over next few days, one should expect to see less selling from foreign institutional investors. Okay. Domestically, February numbers came in yesterday. They were good, strong, over 10K crores for equities. So there is money that needs to be deployed with funds. We know we continue to get strong inflows. So, kind of good support from domestics, which is happening. As soon as, foreigners stop selling, because China is at least stabilizing, and that's the biggest part of EM basket, we could see a bump up in India as well in valuations again.
Well, let's hope for that. A bump up in valuations would be very, very welcome. But Pratik Agarwal, thank you so much for agreeing to talk to us today on such a short notice. Really appreciate your time today.
Thank you.
That's the Chief Investment Officer of ASK Investment Managers, the largest portfolio manager in the country, talking about his thoughts. And I like the way he chose his words, Devina, that for their investment universe, he believes that the levels are good. So the point is, you got to pick and choose your battles. We've had two eminent portfolio managers coming out and saying that for their companies, they believe these are the great time to buy. But I think people should take caution. It may not hold true for the entire bucket. It may hold true for specific companies.
Yeah, in fact, since we were talking about the index and being in the bear market, there have been stocks which have corrected far more, like 30-40% correction. I just want to quickly read out a quote from Neelkant Mishra. He's put it out on Twitter. He says, indiscriminate corrections can provide opportunities. While we still don't believe it's time to bottom fish, with a 45% of the top 200 stocks more than 30% off their all-time highs, one must start screening for buying ideas. So everybody is talking about having that list, having those stocks that you would have wanted and liked to own at some point, but thought they were very expensive. And now is the time to make that list, and as and when you feel the price is right, go ahead and invest.
Yeah, no level or no price would necessarily be correct. What you buy today on the best of advice might dip another 5% tomorrow, but in times of fear, you got to be greedy, and in times of greed, you got to be fearful. These are times of fear. Might be a good idea to start making a screening list. But, we've got a lot of advice on the show today. I hope you have benefited out of it. Thank you so much for tuning into this show from Devina and me and the entire team that has put this leg of Indian Open together. Thank you so much for watching, but stay tuned to BloombergQuint Live. We'll get you lots of news and updates, and do log on to our website to read more about all of this.